Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Before guys, we will turn directly to discussion of the situation on the Great British Pound. I just will make the short announcement. So in July, guys, I will be on vacation, and don't worry, I will continue to put the videos and researches, but they will release slightly later than usual. So it's approximately 1-2 hours probably later. They will appear also in the each session, and in the weekly in the weekend we will prepare the weekly researches, but it will be just shifting of time of release a bit later. So right now let's talk on the Great British Pound. Today actually I thought maybe let's take a look at the euro currency, but well, I have compared the thoughts that we have discussed previously on last week and what is happening right now. So I think that our view on euro currency doesn't need any update right now. So the situation is almost the same. In our video that we have released within the last week, we said that market should show the 50% retracement, and right now this has happened. So everything stands according to our analysis, and nothing new really we could say about the longer term situation. That's why I just thought that maybe it makes sense to make the update on the Great British Pound, because there are some reasons for that even in the short term. So first of all, guys, I strongly recommend you to read our weekly research, because it contains a very significant part of the fundamental information that today is dedicated to labor market in the United States. And the overall idea of this analysis was prepared by Fandom Consulting. If you remember, they have prepared very good update on the fundamental update on Great British Pound that forecasted the weakness in the Great British Pound, not in relation to the Brexit, but by itself, from the fundamental situation in the economy. And right now they have prepared very interesting analysis on the labor market in the United States. Precisely speaking, they tell that currently some decrease of the activity in the labor market makes relation not to the weak economy, as many analysts think right now, but mostly to the seasonal patterns that stand in the labor population. So, and by this analysis, they come to conclusion that this really could be the shake for the market, since they disagree that Fed hardly will rise the rate in the current year. After the Brexit, there are a lot of screaming around that Fed probably will not rise rate in current year, and the Fed futures right now shows just 26% of the probability of the rate hiking in 2016. But they say that we are disagree, and they explain why they think so. So maybe it really makes sense, because this could become the turning factor. It's a very important moment, because this will be this could bring really significant surprise if Fed surprisingly will hike the rate in December. And we should be prepared for that. And we should watch for what will happen in the United States economy and in general in the markets in the coming half of the year till the December. So it's a really important moment. Also, guys, in the weekly research, we have prepared a long-term view on the Great British Pound, and particularly interesting the weekly and monthly charts. But in the daily video, in this video, we will trying to finalize the complete discussion of our long-term target. Mostly it has been reached already. So I speak about the 1380 target, but not quite. And this some not quite completing. It's important for the short-term perspective, and particular to this subject we will talk today. So on the daily chart, guys, we see a huge drop as a result of the Brexit. And market right now stands in a tight consolidation right at the bottom. So on the daily chart, we do not have any interesting important patterns. We could say that market right now stands at oversold. And the trend is, of course, is bearish. But at the same time, you could see on the chart that our target that stands on the monthly charts, 130.80, has been completed slightly. So market hasn't quite reached it. That's why we think that before any retracement will happen here, market should touch it. That's our view. Our second interesting pattern that could be formed here is the volatility breakout on the weekly chart, because this drop could be the first leg of the volatility breakout pattern. And as a result of this drop, we could get another short-term target after retracement here will happen, because as a result of this retracement, we will get A, B, C top, and some D point. That will be our next destination point. But for that purpose, we need first market retraced up. Here, in turn, we tell that this retracement up will not start until market will hit the target. So, that's been said, the first object that we will be watching for is the completion of the monthly target. It's 130.80 area. Second is the upward retracement. That's just two moments that we will be watching for next week, maybe within the couple of weeks, because retracement up could take more time than just 1 week. So, but we will start next week with a possible downward action and the completion of this target. On the hourly chart, guys, we have the pattern that really could let market to complete this target. And this pattern is butterfly buying. This is hourly chart. Maybe market will change the shape of this pattern. For example, if some upward action will happen here inside of this swing, this market could, for example, this butterfly could become that way, this sort of the butterfly. It really doesn't matter, because whatever wing will appear inside of this area, the major point is based on the initial swing of the butterfly, because by the initial swing of the butterfly, we estimate the target. And the target stands approximately at 130 even. So that will be the area that market should reach, and that's the pattern that should lead market to the completion of the monthly chart target. As soon as this target will be completed, take a look that butterfly is simultaneously the upside reversal pattern. And as soon as target will be completed, we expect that market will finally start this upward retracement on the short-term chart, on the daily chart in particular. And that is the second stage of our analysis. So after that, after market will complete this target, this butterfly, we will be watching for this upward retracement to get daily and ABCD and all other stuff that we have just discussed. So that's been said, that is our current view on the Great British Pound. Today I just would like to finish our discussion of our long-term targets, since we were moving for a long time to this target, right from the top that we have on the weekly chart, and the market has started to drop down. So that was a really long journey and an analysis. Initially, we have made analysis on this target even in 2011. Those of you who read our Forex Military School course, there's the chapter dedicated to Elliott wave analysis, and there we have put the practical application of the Elliott wave, and by the Elliott wave tool, we have made the forecasting of the reaching of this 138 area. So that was really interesting. I have put the link in our weekly research to this analysis. So if you're interested, you could read it. So really nice stuff. So that's been said. Let's see what we will get on the next week. So just two moments. First is reaching of the target. It's 130. Second is upward retracement that will let us to estimate the next target in the short-term charts.